Hi guys, good day once again. Okay, so um, want to do a back test of a pair of a synthetic pair. This happened to be the step 100 index. So want to back test on what happened the previous week before this week. So from today is Friday, from Sunday or from tomorrow Saturday, I'll be back testing this week's trades. Okay, I'll be back testing this week's trades. So just watch out, follow me, and you're able to follow up some trades that I'll put out there. All right. So to start with, let's start with backtesting. So this is the week between the space between the yellow line and the week. This is Monday last week and Monday this week. Okay. Today is Friday, so we'll find out. We can even, I think I can even do a back test on this particular. Okay, let's do this. I'll do a double back test. I'll do a back test of last week and I'll do a back test of this week today. Okay, so we'll see why market moved here and we'll also see why market moved this current week that we are in. All right, so let's start. First, you draw your trend line, where your support and resistance line. So where do we have a support? At this point, you may not clearly see a support area, but let's switch to this. Yes, now by this, we're seeing one support area here. There's a support area here where you have this touch, break, this touch, and yeah, so I think perfectly we see 1, 2, 3 on the same area. If we are to look out for another one, yeah, somewhere here, this is perfect. Yes. Oh, this is not the line I used to use. Let me change it. Okay. This one. Let me change this to. All right. So I could do a. Let's change it back to candles. Let's see where we do that line. Okay. Yeah. So this is where our line interacted on, and this is where our line is. Okay. So we have one support area here, and we have, if you notice, see how price tapped on this area too. So we can adjust it a bit. Yeah, just to be exact. All right, and we have one here at this point. Okay, let's box it in. Price is not, you wouldn't leave it as a line because it might not actually be a line. And the reason why I make the box this small and tiny is so it doesn't cover, imagine having a box like this. It doesn't give you precisely where to start entering your trade from and all of that. The box is too big, and despite, and aside that, rather, if you go down to a lower time frame, these boxes that you see that is small like this becomes bigger in the lower time frame. Okay, so yeah, at this point we've done our map outs of the zones, the support and resistance zones, or supply and demand zones. So the next point is, what's the trend of the market? At this point now, market seems to be selling at this point here, but it has sold off and it's at a zone. So one thing that you remember is whenever market is at a zone, you don't have any bias until market is either leaving the zone, confirms that it has left the zone, or it is it is like rejecting from the zone, is rejecting from the zone. Price is being rejected from the zone. So it's either going to be a break and retest, or it's a rejection, kind of what happens to a resistance zones. Okay. So this is why you don't have a concrete bias. Market could be in a downtrend, and when it gets to a zone, it changes. So when you are at a zone, you have to wait for market to give you a specific or specified direction first. If it's breaking, let it break. Okay, if it's going to um continue, If it's going to reject from that place, wait until you get your confirmations before you can take the entry. All right. So that is it. So market is at a zone now. And before market came to a zone, we saw this move here. We saw this move. Market was initially on a downtrend, right? Had this downtrend move here, right? Then markets spiked up. So this spike up cleared off all these areas here. So market is trending downwards towards this full area. This is like the overall range of the trade. So, and market has come to a zone area, a zonal area of this. So you would not likely be looking at trading the market from this point. You would not likely be looking at this market going back down. We're still in a range of a buy because of this break of structure here, this change of character here is what market is doing. All right, market is trying to market would try to come down to this place to retest this place. If it breaks and continue, then we're looking at market coming towards this area. And beside, there's another block here. This is another block here. We have another block here. So I'll mark out that. Well, at this point, market is still in a buying range. You get it's still in a buying range. So and it's at a zone. These are two confirmations. It's on a buying range and it's at a zone. So these two confirmation tells you that you can't actually trade this market. You can't decide what the market will do from here except it breaks and retests. So for now, you would have to wait. Since you've not seen this week yet, you have to wait for market to show you where it's going to. Okay. Um. Yeah. Okay. So sorry, I was trying to do something. All right. So yeah, next in line, what we're going to do is we're going to place our order blocks, our areas of um, interest. So markets might likely come down to this point, but we don't know yet. I mean, as at this point, when market closed here, we don't know yet. Okay, so we'll just put it there and hopefully market gets to that place. We're trying to find out why market moved from here. First reason, it's in a buying range. Second reason, it's I would have to put the range. Let me get so DTR means daily trading range. Okay, so I want to cater for the range. This is depth 100 index for those who might want to find out what pair is this. It's a synthetic pair. All right. So yeah, we've catered for that. This is our order block area. Now let's cater for our let's cater for our that's a daily fair value gap area. Okay. That's a daily fair value gap area. All right. So yeah, we've done what we do to wait for the price. So then during the week now, we will now see that price came down to retest on this zone here. And if you look deeper, if you look deeper, let's first cater for where we have the break of structure. We had a break of structure. I would usually put it here, but then for the sake of those who want precise, let's use the week. Okay. Let's use the week for today. Yeah. So this is where we had our change of character. Yeah. This is where we have our change of character. All right. So if you go down to a 4 hour time frame, I hope this video is not that too long. All right. If you go down to a 4 hour time frame, we have several positions where we could draw out our order block, our order blocks and our fair value gaps before we had the break of the structure or the change of character on daily. So in 4 hours, we had this position here, this another block here, and we had there's no fair value gap yet, except for this one here. Yeah, there's a fair value gap here, but it's within, it's actually inside a another block area, right? So if you look very closely, this other block here, as price came down to that point, okay, there's a manipulation that happened here, and I would love to show it to you guys so that in case of when you get this in a live market, so you know how to trade it. So this is likely an order block, a partially mitigated order block that was shown in 4 hours, right? And that's also likely where you would have, even me, I would have been waiting for market to come down to somewhere here to retest, either here or here, but this is closer to the zone, so I would have actually been waiting for somewhere here. So when market came here, remember the rule that we have here. If it trends down to that location, right, you have to wait for a break of structure before you can take the trade, right? So now it trended down to this location here. See the trend? It trended down, right? Now we had to wait for a break of structure. This is where this structure was broken, right? But it didn't break with a candlestick reversal pattern. There's no candlestick. The candlestick, this engulfing stopped here. It actually did not break above it. It was the next candle that broke above it. So undoubtedly, you would actually be waiting for market to come back somewhere around here. Let me shift this. Yeah. So you'll be waiting for market to come back somewhere around here in, let's say, 1 hour. Yeah. Because there's a break now. There's a confirmed break. Let's check it out. Yeah, it came down. Then this made the confirmed break. This would have been your bias. This would have been everybody's bias, actually. So, but it's a manipulation, right? This was the break that broke off. So be waiting for market to come down to either this other block here that is below the break to mitigate it, or this other block here to mitigate it. So if you notice, market invalidated this other block. It went straight, but it didn't give us a candlestick confirmation to buy. And if you look at this one too, market still did the same thing. It invalidated it. So it just came and cleared that zone. So there was no setup. So this alone would tell you this zone, market is not willing to give this zone out yet. It's still going to drop. Market is still going to drop. So by doing that, you're not in the market. This is why you have to wait for confirmation. So this order block here was invalidated. So we're looking at the next order block, because until we get all these zones figured out, all these other blocks here figured out, because they are actually before the break of structures. This is how you avoid liquidity, how you avoid being the liquidity of the market. Do you get? This is actually how you avoid being the liquidity of the market. So at this point now, market use this second one, this next one now. This is the one we're going to use. In the 4 hours. Yep. So exactly. Sorry, I have a bit of cold. Been having cold lately. I think I need to treat this thing. All right, let's go. So market use this second one here as as our tap and retest. You get, as our tap. So now, if you look closely on 4 hours, market has mitigated this one and it has left. But because it trended there, you notice there's a trend, there's a trend, there's a trend. Like, let me put the line. You see how markets went, created a high here, created a high here. Need to get this here. Broke it, right? Created another high here. Okay, let's use the week so that you will not be created another high here, broke it, market still came again, created another high here, created another high here, created another high here. This was the high that we were following to see if we can buy the market, but market didn't give us that. So, but it later became a downtrend. Created another high here, broke it. So all this high means you need to wait for a break of structure before you can jump into the market. So this was the break of structure. This was the last high before it broke, right? So this was where we had our break of structure. Let me put it on the week to avoid the noise, okay? So when we had this break of structure, this full point here became our range, our 4 hours trading range. This full point here became our 4 hours trading range. You can put it here, you can put it on the second one, however it is, just before it starts going down. So now we're looking at this week to see if we can see trade that will make us take this trade for last week. All right. So at this point, market will come down to 1 hour to see if we can see something here. This was the point of, this was the range, right, that we're looking at. And this was the point of, after market did this, okay, look at what happened here. Now, this is why I wouldn't actually take this trade. I might not actually take this trade because it's looking somehow. It's confusing my bias. It's not in line with my bias, right? So, and I'll show you why I wouldn't take it. Let me zoom in well. So this is why I wouldn't take it. The next time when on 1 hour now, you'd probably have your order block settings here, all those stuff you get. There's little or no, in fact, it's invalidated. So it's not even it's not prioritized. So there's just this 1 hour order block that is here. This is just the 1 hour order block. So number one, it didn't get to the 1 hour order block. Yeah, it didn't get to the 1 hour order block. So I wouldn't be interested in the trade. Secondly, why I wouldn't be interested in the trade is our rule. When it started retracing back down, here it formed a low. Now, when it started retracing back down, it started forming a trend. There was a trend, right? It started forming a trend. It broke. It keeps making lows and breaking. So what I want to see here is a break of structure. And the structure that it broke here again was also this structure here. There was no structure here. There was no low here before a downtrend. All right. So the last low before the downtrend is here. This is the structure. You see how we are following it up, right? Please follow me. Yeah. So it broke the structure. So you are now waiting for a new direction to buy this market, right? A new, this thing, what do you call it? A new area of interest to buy the market. So if you look, there's another block here. Market just came and invalidated the other block. Now there's another other block here. If you look closely, this market also invalidated it. It went below it. So it's a point of invalidation. But then there is one last other block down, the one just below the entire market, which is actually on the which is actually, yeah, on the zone, on the area of sorry, kind of having a running nose. So at this point, we are trading, the trading range for 1 hour is between this point and this point. So any other block here that we are catching, we're taking the other block as a buy. Okay. So market invalidated this one, but market respected this one. Okay. A lot of people might also once you see this push, you might take this trade for a buy here because this is a candlestick pattern, a reversal pattern. There was no trend down to that point. You can take it here and put your stop below. I would have put my stop, if it was here, I would have put my stop below this middle 1 hour order block. Again, yes, this would have like scared you, deep scare you get, but then it still went a direction, or you can wait for the second. You can see if you see the second push, you can still wait for it. So, but then this is the next week. Now let's go to the next week. Remember, we'll finish the first week. We didn't see a confirmed entry. So, but the next week now, we see how market is still within this zone on the next week. Let's go to 4 hours. On 4 hours, now on 4 hours, market has now finally, market came here for that week. There was no, except for this break of structure here, right? Market mitigated this point, still on the same 4 hours. Remember, we are still inside the 4 hours order block. So market mitigated here last week, right? But there was a break. You see this? There was a break, although it didn't trend here, but that's fine. So markets did this, came back this current week now to mitigate. I don't know if it touched the 4 hours. Okay, it didn't touch the 4 hours. So it was on this point. But on this week now, I wouldn't want to trade here because I would want to look out for a break of structure. It's still within the 4 hours trading zone, yeah? Yeah, but I would want to look out for a break of structure. Let's say this structure here, yeah. If you see this early in time, then fine. Yeah, but if you don't see it, left for me, if I get something like this, once I see the market is here and that's caused a break of structure, giving me this move, but I'm telling you, I would have actually bought this market from here last week on a 4 hours time frame. But if you look at it on a 1 hour time frame, it's still not settled because 1 hour, this line trended down. If you notice, there's a line here, there's a break of structure line here. So it trended down here. So on a 1 hour, I wouldn't take it, but on the 4 hours, I might take it. I would have actually taken it because this looks like a tweezer bottom. So I might actually take it and put my stop at the middle of the 4 hours, right? I would have put my stop at the middle of the 4 hours. Yeah. So, but nonetheless, let's see if now this week had to print us, aside what I just did now, which is me taking the trade from 4 hours. The thing about 4 hours trading is it takes longer for your trade to mature. So you gotta wait days. You have to wait days for it to actually mature. But then it will still mature, right? It's still going to mature. So but aside that, now if you see this kind of interest, market coming back on, what day is this? On Sunday, coming back into this zone again for the third time. Remember, this is the first time it came here. If you notice, this is like a shoulder, head, shoulder, right? So this is the first time it came here, second time it came here, third time, or let's say 1, 2, 3, 4, yeah. So let's say this is the fourth time it's coming here on that week. On Sunday, this is a perfect Sunday, 12 o'clock or 4 o'clock. So this is a perfect, I don't know, is this correct? Let me check the time. Okay. I'm in Nigeria, so I'm using Lagos time. So that's Sunday, 1 o'clock in the afternoon, 1 p.m. and 5 p.m. So if you notice this move, then it's good. We are still within the 4 hours trading zone. So anywhere around here, we are looking for our buys. So if you look at 1 hour for this week now, 1 hour for this week, this is a good place to jump in on the trade, right? Yeah, this is a good place to jump in on the trade. So, but then I would still want to wait. On a 1 hour, it's not clear for me. It's not just clear. But then if I see this move, look at this move now. After market breaks off all this place, you see what's happening there, right? After market breaks off all that place, if I see that move, what next thing I would do is there's a 4 hours order block here. There's a 4 hours order block here. I hope I put it well. Yeah, I think I did. Yeah, there's a 4 hours order block here. So after this whole break, this becomes my new 4 hours, although this would have been a sweet trade. I mean, if you had entered this in, you would have caught on a 1 hour. If you had entered this trade, look at what it is on a 1 hour. Look at what it is on a 1 hour. See, from here all the way. So if you had entered this trade from here, or even from here, put your stop loss below that 1 hour midline, right? You would have cashed out big time. Like you would have cashed out big time. Big time. You would have cashed out big time. Okay, let me put it. So let's see. But like I said, since it didn't trade to that point, since it didn't trend to that point, it is still valid for 1 hour, right? It is still valid. This would have been my entry here. I would have entered there, put my stop below this point. Let me just write it. 1 hour. Yeah, this is where I would have entered this trade. Put my stop below this 1 hour point. And let's see if it gave 1 is to 3. Did it? Did it? Did it? Did it? Did it? Did it? Oh no, it didn't. It gave 1 is to 2.9. But it's fine. I mean, if you were trailing it, you would have been putting your stops above like that. Right? So, but it's fine. 1 is to 2.9 is not bad. Trust me, it's not bad at all. It's not bad. So on the 4 hours now, this is what we had on the 4 hours. Market came back, broke this structure, came back to mitigate that 4 hours area, right? This same move here, let's see. Let me write it down, 4 hours. Yeah, so in that full, okay, I need to go back to change the, yeah, so this is our new range. This is our new 4 hours range, trading range. So if you notice how markets came back straight, there was no trending to that place. Market didn't trend there. So I know it's running. Okay. So on 4 hours, this is what we're expecting. On a 1 hour, the other block, there's no fair value gap here. Let me take this out. Yeah, there's no fair value gap here except for this fair value gap here. But this fair value gap was what do you call it? It was invalidated by this week. So the only point here that made sense was this point of the 4 hours, this other block on 4 hours. That was the only point that made sense. So market broke this point, went down, gave this move here, sweet move. This, I wouldn't consider this on this 1 hour time frame. I would not consider this a trend, right? I wouldn't consider this a trend because it's likely the same area where market opened, right? So, but then if you're still going to take this market on 4 hours, I would have taken it. Then on 1 hour, I would probably, on 4 hours, I would have probably made lesser because see the point here, yeah? I would probably make lesser. Imagine taking this trade from here. Just imagine taking this trade from here, putting your stop here. It would have been way lesser. See? Give up to 1 is to 4 though, but your 1 is to 3 gap has actually been met. Your 1 is to 3 target has actually been met on 4 hours. But on 1 hour, if you had an earlier entry on 1 hour, the earlier entry will be here. Will be here, which is 1 is to 8, right? Yeah, this is 1 is to 8. So if you consider this as a zone, so when you see this break of structure, you could still want to take another trade there after this break, this full body break here, but your stop will be just below the area, okay? And you can still make your profits. This is like 1 is to what? 1 is to 5. It's still good. Yeah, it's still good. 1 is to 5 is still good. So if you took this trade, whether you took this one or you took this one, any of which they still align to our rules, right? They still align to our rules. So that is the back test for now. If you have questions or there's something that's not clear to you, let me know. Drop your questions on the comment section and I will reply you. Okay. Then if the strategy isn't clear to you, drop me a message and go check out my Instagram. Drop me a message on Instagram and I'll also reply you there. All right. So for now, have a good day. Don't forget to subscribe, like, drop a comment, and on your bell notification so that when I drop my videos, you would know. You'll get a notification that I have dropped another video. All right. So have fun. Bye bye for now.